Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Dr. Merav Ozair, global leading emerging technologies expert, Jason Rozovsky, general counsel and head of policy at Interop Labs, as well as Ido Ben Natan, CEO of Blockaid. We're here to discuss cybersecurity and decentralized finance as a move to more mainstream adoption of crypto assets likely increases the number of attacks. It is great to have all of you with us. Welcome to Trade Talks. Ido, this is an important conversation to have because we're not at the point of, oh, could it happen? But with the infrastructure building out at this scale and the adoption that we're seeing by institutions and more retail investors coming on, we need to think a little bit more proactive at this point.
No, 100%. I think it's not a question of, if cybersecurity incidents could happen in, on DeFi. They obviously do, right? Like we see over the past, on a weekly basis, we see over 10 or so attacks on some of these like major pieces of infrastructure. And I think, as more money is coming on chain, as the rise of stable coins kind of brings potentially massive additional use cases into these kind of new rails. Obviously the threats grow with adoption.
Yeah, and I would think with the integration of TradFi and DeFi, that adds another layer of complexities just because of how traditional finance is regulated and the speed at which DeFi is moving.
Yeah, that's right. And so we at Interop Labs, we built XLR, and XLR connects 80 plus blockchains today. And the whole purpose really that it was built was to kind of try to decentralize and distribute the risk profile, right? A lot of the issues that you've seen in the bridge space and the cross-chain space have come from these kind of, one or small groups of entities that are controlling these contracts that are holding, massive amounts of assets. And, frankly, if you're a traditional institution, you need the resiliency that you see, as you mentioned, in today's markets, right? I mean, these exchanges, these institutions today that are intermediaries, they have very high levels of security, right? And that's kind of what they're expecting in the DeFi space as well.
Right.
And I think that's very prevalent, and you'd see that very much in the cross-chain space.
Yeah, and Merav, the sophistication of the bad actors is something to take into account as well.
Yeah, I mean, with the proliferation of AI and the advances, everyone is thinking, okay, we can use it, and I know TradFi and also in DeFi, we're using that for prevention. But don't forget that these tools are, the bad actors can use the same tools, and they are very sophisticated, like the ones from North Korea. I mean, they're very, very sophisticated, and they're always upgrading the sophistications and changing the methods. So I think we are in the age of AI fighting AI. So who has the better models and the better sophistication with the AI to fight the other AI? So that's where we're at.
Which is an interesting point, and you noted that these types of scams are now at the CFO level risk, right? And not necessarily just a tech issue because, companies were focused on a number of different businesses and so forth. Bad actors, this is the one thing that they're focusing on. And oh, by the way, they're very well funded. So when you're thinking about it from the CFO level risk, this is something that is enterprise, not just tech.
Right. No, I think something that's really, really interesting, when you look at kind of the levels of risk that kind of exist across the space, obviously, yes, you have teams developing products, right? The tech, as you called it, right? That are super, super top of mind in terms of how they build these pieces of infrastructure in a really, really meaningful way. But, as we see these different hacks happen across the space, oftentimes they're company ending. It's not like when it comes to DeFi and when it comes to crypto, a hack that an organization faces and gets fined, a couple $1 million for, losing a couple tens of millions of records. That's one kind of, that's one kind of problem. There's a different problem where you lose all your customers' funds, and there's no company to work at the next day.
But we can see the change that is happening, at least in the US and Europe, with the centralized exchanges like Coinbase and Gemini. I think they upgraded and upped very significantly their security. They used to have hacks, now they have less. And because they understand, when they had, I think a couple of years ago, they had this hack and they said, oh, we're going to, compensate and all the customers. So they have to compensate because they have insurance. So they're very aware that they have to insure the customers, otherwise these customers will never come back. They move to something more.
Let's advance this conversation a bit, Jason, from a policy perspective, because a lot of this goes into protecting privacy, right? That's governance 101, right? So what about privacy being at odds with the principles of an open blockchain? Is that being addressed?
Yeah, so that's a great point. You know, it's this kind of trade-off, right? When you have public permissionless blockchains, they allow for something in this space around transparency, right? Like security is upped because you're able to see all the information that came with the transaction, right? So if it's a cross-chain transaction, you can see the wallet address that it came from, you can see the wallet address that it's going to, you can see what the message is that's being sent. If it's a token, you can see what the token is, right? And so that obviously enhances security. Now, institutions have always had an issue with that, right? Because at the end of the day, not only are they not only is transparency problematic from a competitive perspective, right? Because they don't want their competitors to know what their assets are and what they're trading. It also, is adjacent to kind of all the customer concerns, right? As Ido mentioned, right? There's all these regulations that govern how financial institutions have to essentially handle their customer data, right? And so that's obviously at odds with, a public blockchain if you have to essentially publish all the information of your underlying assets. And so, one of the things that we're seeing is the rise of these institutions actually operating their own layer 2 networks. So as an example, Deutsche Bank, as part of Project Guardian from the Monetary Authority of Singapore, is working on something called DAMA2. So DAMA2 is a layer 2 blockchain. It's built using the ZK Sync stack. And so what they're able to do is control the operation of that network themselves, right? And so because they're using ZK Sync, and I believe it's called Providium, they're able to actually have tailored privacy controls on that network, right? And so they're able to meet the demands of the client as well as the regulators using that. And then what they do is to get distribution of the assets, they use Axelar to then bridge into other ecosystems, right? So to the extent that they have these privacy controlling features on their network, they bridge out and they're able to now access public permissionless networks and all the resiliency that brings and access global liquidity, right? And so you're seeing these kind of rise of all these networks, and I think this is why interoperability is as key as it is.
Yeah, so this is why security at the protocol level is critical here.
I think it's much more than kind of just security at the protocol level, right? When we zoom out and kind of, Jason's point here into what we're building as an industry, right? It's ultimately this interconnected network of networks, right? Deutsche Bank's network will connect to a bunch of public networks and a bunch of other networks after that. And ultimately, assets will move at the speed, at a speed otherwise never before seen, right? We're making money quite literally move at the speed of data, right? And so when we think about that, when we think about hacks, and we think about how quickly these attackers are able to then extract these assets and move them anywhere they want in the world, right? Within a permissionless kind of ecosystem, to some extent that those networks are permissionless, then security becomes ever so paramount across not only the core protocol stack, but also at every single stack there above that, right? Every single application, every single kind of piece of infrastructure that's built on top of that, to basically go and detect these different threats and act on those incredibly quickly to prevent that kind of movement from just kind of perpetrating across the ecosystem.
And to make one parallel in the data world, right? You had a lot of different intranets being built out during the 80s and 90s, right? And then you had TCP/IP come along, right? And you had this protocol that everyone agreed to move data across the internet that allowed for interoperability of that data, right? And I think, it's a very kind of similar situation here as well.
Yeah, 100% and agree. And just to kind of add on to that parallel is you then had all these kind of open networks, right? And I could just go and send a packet from my home computer to your home computer, and then you had the introduction of these firewalls, right? Which basically went and said, okay, great, these are the rules that my network is willing to play by, right? And so I'm willing to accept these transactions. I'm not willing to accept these transactions. If we kind of draw that parallel to kind of our world. And ultimately kind of work towards making this kind of, mesh of networks ultimately talk to each other, but still kind of uphold controls, security controls, and things like that.
But we don't have that now.
Yeah, we don't have that. I mean, we have it, in the non-crypto space, but we don't have it in the crypto space. I mean, well, it hasn't matured. Now it's maturing.
So maybe sorry to interrupt here, but Blockaid does that. That's exactly what we do, right?
I was going to say, why not do it?
Right.
Yeah.
So we work.
No, I'm not saying not to do it. I'm just saying that we don't have it.
I meant more from the perspective of if Blockaid is doing it,
Yeah.
why can't the industry standardize itself?
I'm not saying not to standardize it. I think that now they have to, because they have to bring the security that they have in the traditional sector to apply that to the DeFi, because if all these big institutions like JP Morgan, Deutsche Bank, or whatever, everyone else moving to the DeFi space, they have to bring the same requirements that they want, that they need, in financial system, the traditional one, to the DeFi space.
So to answer your question on why we don't see the industry adopting it necessarily, or where we are in terms of that adoption curve, right, is I think, so one, they are, right? We have hundreds of customers, we work with some of the biggest exchanges, some that we work with some of the biggest DeFi protocols in the space, some of the biggest wallets and infrastructure, and I think they're making that move, right? One, building products takes time and it's hard, right? And kind of prioritizing adding in these kind of controls while scaling a business is a question, right? How much does Nasdaq spend on security versus new products and infrastructure? These things take time to build up. But I think apart from that, and kind of on top of that, is that the industry has largely been focused on, okay, what we do after a hack, right? How do we track and trace these funds after the fact, right? And ultimately, we all realize that knowing that assets went to North Korea isn't super valuable, right? No one's going to march in there and grab those assets after, right? And so I think that understanding that there are solutions like Blockaid that are able to detect these things as they happen, before they happen, and work with teams to prevent these things from happening in the first place is still a relatively new thing that is happening across the industry. And I think a lot of it is just creating that awareness that for teams to know that they can actually solve these problems.
And that's what it sounds like to me, Jason, is actually having awareness, because why not apply data governance principles that exist, not even TradFi, but any type of company, to this evolving space.
Yeah, I mean, it's part of kind of the benefit of this space, right? Is that there's this kind of new technology that's arisen, right? This innovation, right? Which is these always-on networks, right? That are have distributed validator sets, right? They have these tokens that create these incentives for validators and other operators to kind of take the right actions and do the right things, right? So we've added this kind of level of economic security in a way in how these networks are operated, right? And so that is the innovation, right? And I think that what you're seeing now play out is that people are seeing that you can have that innovation, but then you can kind of start balancing that with things like Ido was saying, right? Where you kind of have centralized entities playing their roles as well, right? But I think at least from our perspective, from the Axelar perspective, we do believe that at the interop layer, it is the open, public, permissionless benefit that anyone can gain simply by plugging in, right? And I think we want to kind of ensure that part of the market,
Merav, that was a question I was trying to ask you. Is it an issue with the ethos of what DeFi was or is supposed to be that was a roadblock?
This is exactly what I'm saying. Like let's put things in perspective. I mean, DeFi just now is starting, to get momentum because we're getting clarity with the regulation. I think that all these platforms didn't think that it's worthwhile for them to invest, because it's an investment to invest in security. There's not much going on, and it's like kind of a side kick, kind of everyone's saying, oh no, all the criminals are over there. But now we have a lot of traditional institutions, financial institutions moving to that space. So now it's a different story. And now they start thinking about it in terms of, okay, now we have to invest. Now it's important. Now we know that our entire, system is going to move on chain.
Right.
And this is why they need to adapt that. But they haven't, it wasn't, at front of their mind when it wasn't kind of like very, very outside of the traditional.
Maybe just to add to that, right? I think it's also, when we look at even parallels in traditional, industries, it's never been the role of, the companies building in the space to self-govern, right? They've never done a really good job of doing that. Now, I'm not saying that crypto should, not be self-governed necessarily, but rather that, and I think that this administration is doing a good job of introducing more policy work in this space to go and say, hey, these are some of the things that we think are top of mind, right? There was a White House executive order that came out, I think on July 25th or something like that, that had, the first mention of some kind of proactive, preventative solutions for cybersecurity. We kind of worked with some of the folks there to go and kind of build that out and write some of those things out.
I want this to be an act, not the executive order.
Right.
We talked about it before.
No, right, but it's a step in the right direction as far as regulation is concerned, and they mentioned, and it's kind of a small kind of step in the right direction here is that these DeFi wallets should probably simulate and validate transactions before proposing them to users. Right, one security control, it's one step forward, but I think we'll see more of that.
What I think what's going to happen is that because now we are moving to on-chain. We see that with all, whether it's Nasdaq, trying to tokenize and all kinds of other institutions. So the way that I see that, the financial institutions have been very, very, very regulated. And this is why they have all the security and they have, the responsibility to the customers. So there's a lot of that. And this is why they have like, I think I read somewhere they're saying like 50% of the jobs in financial institutions is all security, unlike other industries. And what I believe is going to happen, since we are moving on chain, we're going to have the same. It's moving there because all the financial institutions that are moving on chain will require that because they are regulated. It doesn't matter whether it's off chain or on chain. Right. They have the regulations, some regulations. It's not like, oh, you're moving on chain, you're not regulated.
Well, it just won't happen. You won't be able to operate in the environment.
But if you are JP Morgan, I don't think they can say, oh, we're just moving on chain.
Exactly. I'm sorry.
Yeah, I would say this goes down to the tension of the space, right? Because today, as an example, right, under certain securities regulations, you need certain intermediaries, right, to be in the picture, right? You need a transfer agent, there are broker dealers, et cetera, right? So to the extent that you start outsourcing those functions to a blockchain, right? Today, you still need those intermediaries, right? So I think the chains and this concept of moving RWAs and securities and tokenization, all that good stuff, it's going to have to prove its resilience, right, to the regulators, right, to say, you know what, maybe there is some shift in regulations that can take place where there aren't these same intermediaries that you needed before, right, because they made sense in an intermediated financial system, right, where everybody was there kind of, had their little fiefdom of data, right, and then they connected to someone else that had their little fiefdom, right, but not to the extent that a blockchain that's open, public, permissionless can actually set up a P2P transaction, with atomic settlement and delivery versus payment, all that good stuff. From a policy perspective, it calls into question, the need for some of these intermediaries.
Right. And Ido, to wrap up here, because we're almost out of time, I think we can, because it's Cybersecurity Awareness Month, I don't think this is specific just to the DeFi space as well. We can just look at the past 2.5 years where everybody was focused on emerging technologies. When you are building these types of technologies, products, revenue streams, and so forth, it's not always cyber first, right? And I think the culture, I think cyber's having its moment here where culture or competitive advantage is really being baked in to cyber now.
Yeah, so I think a couple of things here is like one, ultimately, as an industry, right, we're building financial infrastructure, right? And when we all think about it, right, as consumers, right, where we put our money, ultimately the differentiator is trust, right? We go to our bank, the next day the money's there, right? And so I think like cybersecurity, specifically in crypto, but also not just in crypto, I agree with you, right, is definitely a differentiator for these different companies, right? In crypto, oftentimes we use this kind of this term called the Lindsay-ness effect, right? How long has this piece of technology not been hacked? And that is kind of a main differentiator in terms of how users decide where they go and deploy their assets. And I think it'll be a differentiator in terms of how institutions go and think about building their stack. And so we definitely see that.
Excellent point. Appreciate everyone's insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.